Hello, everyone. I'm Gayatri from Index One, and I'm joined today by John Gray, the creator of the winning concentrated momentum strategy index calculated by us at Index One. Momentum strategies have delivered strong but cyclical performance with recent strength in 2025 and early 2026, driven by concentrated equity leadership. Adoption has broadened significantly as ETFs scale, with global ETF assets reaching about $19.9 trillion dollars and record inflows of around $2.4 trillion dollars in 2025, reinforcing structural demand for systematic strategies. Within this, active and factor based ETFs, including momentum, are one of the fastest growing segments, expanding at very high rates and increasingly used in institutional model portfolios and multi factor allocations. Based on early 2026 data, momentum focused ETFs in the US market represent roughly $64.57 billion dollars in total AUM. Overall, momentum is now a mainstream factor within diversified systematic investing rather than a niche or a standalone strategy. And so, drawing from these trends, we invited John Gray to the webinar today to tell us a bit more about his perspective of the rise of momentum strategies and their applications, and the winning concentrated momentum strategy index, which is calculated by Index One. John, thank you so much for joining us today. First of all, tell us about yourself and help us understand how you approach momentum based strategies.
Greetings. Thank you for asking me to join you. Uh, about myself, I grew up in New England, in Pittsburgh, did my undergrad in Indiana, started my career smiling and dialing for Lehman Brothers and Bear Stearns for a couple of years. The highlight there was every morning joining Larry Kudlow's analyst meetings and in the small group, and that was very enjoyable. Was encouraged to pursue my MBA, so went out to Arizona, waited a year, waited to qualify for in-state, and joined Charles Schwab in one of their call centers and did my MBA at night at Arizona State. Soon after, learned in the trenches and then joined Citibank as an investment consultant down in Palm Beach Gardens, and learning about mutual funds and indexes, and obviously during the dot-com craze and seeing how some stocks enjoyed a wave of momentum, and got into investment portfolio management in the trust departments of initially PNC. Shortly before 9/11 happened and saw how the markets imploded. And then 5 years at KeyBank up in upstate New York and Maine. And then the vast majority, 15 years at SunTrust Truist. And how this came about, initially back in 2000, saw the a chart, a colored chart of momentum strategies, and was really taken by that, and figured when I was doing especially at the end of the year, you're doing your tax loss selling, you're doing your rebalancing, and trying to window dress accounts for clients, that there must be a better way. And clients, they don't want to see losers, so at the end of the year, you're dropping them, and you're looking to offset some losses where possible, and just trying to at best enhance performance. And obviously in those areas, you're diversified, you have pre-approved lists, you have fund lists, and but in the end, you're not getting much performance from a lot of those accounts. They stick with balanced and maybe try to generate some income. And I just felt there was a missed opportunity in that, and that led me to look into momentum strategies, and then we'll proceed. And so about 6 years ago, that's when I started putting this all together.
Amazing. Thanks, Sean. And I guess why did you build the winning stocks index, and how would you compare this index to other momentum-based strategies that are currently in the market?
Again, it's taking advantage of the stocks that are winning, and looking at portfolios, trying to enhance the performance, not only for yourself as an investor, but also for clients who hate seeing losers. So it's like, okay, let's focus on just adding winners. But then, unlike many of the other momentum funds out there, they're too diversified and they had too many holdings, and so that even if you accurately select a stock and it doubles, but if you have 100 positions and it's only weighted 1 to 4%, it really doesn't add much impact to a $1 million, $10 million portfolio. So the thought was, okay, we got to shorten that so that your winners actually impact the portfolio. So one day I was walking the dog around the block and just said, okay, what's the magic number? And the number, usually concentrated positions are 10% and above. So it's like, okay, we want to be below that threshold. So, believe it or not, I came up with the lucky number 13 as the least amount that you would have in a portfolio, because then it would be around 8%. So it's below the 10% threshold. And, on a $1 million portfolio, that would provide, 80,000, so that if it was up 50%, you'd get, a $40,000 return, where if you were at 1%, you'd $10,000, and, a 50% return, great. Give you 5,000 on $1 million. Who cares? That doesn't, whippy. So the thought is, okay, take advantage of the momentum, but shorten it. The most amount of positions I would have is 24, so you're about 4%, and which is where I'm about now. Although if I'm doing a rebalance, I might have up to 24, but until I do another rebalance, if something pops up that is losing, then it gives me the flexibility to eliminate it and still have a good number in there. So that's how that came about. And so as I said earlier, essentially, as basic as it sounds, you have the momentum, which is the peanut butter. You have the concentration, which is chocolate. Let's make a Reese's peanut butter cup and put the two great flavors together, and so that you have the momentum that's concentrated, so that your winners actually add to the bottom line. Now, the key thing is sell discipline. In the beginning, when I first came up with that, I struggled. And the key is weighing whether, if the market's pulling back, is it a macro situation, and how deep is that macro? A la the war in Iran, Ukraine, or is it something catastrophic like a COVID or 9/11, or which did have a V-shaped recovery, or some other. But in most markets, there is always some winners, and that's the key, is being nimble enough to that when the momentum is stalling or pulling back, is move to the sidelines, away from them, and hopefully you're able to identify other winners, or just keep the powder dry and sit in cash if you need be, and wait for another day. And so that some of the lessons learned and some of the background to that.
Amazing. Thanks, John. Let's now dive into the methodology. So could you walk us through the stock selection process, weighting, rebalance frequencies, and other key elements? And before we do that, as always, to our audience, please note that this presentation is for informational purposes only and does not constitute investment advice. Past performance, whether back tested or live, is not indicative of future results, and the index is not directly investable. Okay, so let me just go ahead and share my screen. Okay. There you go. Okay, so talk us through the methodology of this index, John.
Okay. Essentially, I utilize FinViz as far as doing the analysis, and it's just as vanilla as it sounds. Is looking across the board and trying to find consistent winners, not avoid any bottle rockets, which unfortunately happened to me earlier. It's nice to ride the wave, but get out of them quickly before they explode. And so basically, if this sounds is trying to find consistent winners across the board of all time frames. If there could be some little variance, but hopefully, and once I do that, I'm doing that ongoing, and then I record those. I've created some formulas as well that help me greatly by analyzing multiple time frames at a time, so that when they have the certain thresholds that I'm able to highlight them, and hopefully in the end I'm able to come up with a good 13 to 24 names that have across the board the highest performance ratings that I've come up with, and also identify those that when they're stalling, get out. I mean, and just being confident that, okay, it's stalling right now. Maybe I like the long-term story, but I can always enter it at another time. And that's very important. And all that matters is the performance. I don't care about the earnings. I don't care about insider buying. I don't care about diversification. It's bottom line, the scoreboard is all that matters. So there's no guesses, there's no estimations. It's just the proof is in the pudding. Are you hitting home runs or you're not? That's it. I don't care what position you play. It's just performance. That's it. And when you fail to perform, you're gone.
Great, well said. And let's go over to the fact sheet. So, could you walk us through why these benchmarks were chosen and how you feel the index is performing relative to the benchmark and the overall theme?
And obviously, those are standard benchmarks, the ACWI and S&P, that are widely accepted across the industry, and so that's why they're utilized. And feel free to compare against any other benchmark you'd like. I mean, the only thing that matters is the bottom line, the performance and making money. That's it.
Awesome. Thank you so much. So let me just go ahead and stop sharing. Okay, brilliant. So this is one of the slides that you had prepared, and I know you touched upon this a little bit, but do you want to kind of go over this?
Sure. Just bottom line is finding consistent winners. We're not to degrade them, but we're not doing any guesses about future earnings, future product releases, any other factors that might be happening, whether for the company, for the country, for the world. I mean, obviously, if there's a war breaking out, you worry about how deep the macro impact's going to have, and whether or not, okay, do we sit on the sideline, or hopefully, no matter what, there's usually something winning, and being able to pivot is the key. Otherwise, ride the momentum as much as you can. So, as I said before, we're not dependent upon any flavor of the month, the quarter, the year. Tech has been great, but the only thing that matters is the performance that you're getting from it. I don't care, what sector you're in. If you're performing, we're adding you. If you're not, then you're gone. And so, as I said, the only thing that matters is the scoreboard. Obviously, you worry about macroeconomic factors. Also identifying the bottle rockets, as I call them, things that are shooting up, as it happened before with the subscription services. You had Viacom, you had a couple others, and I rode the wave. I thought it was a genius, and unfortunately, one of the companies had a secondary offering, and the next day it was down 50%. And that was a painful lesson. So the key is being nimble, getting out, and bottom line, allowing the winners to run as long as they continue to lead in their segments. And when they stall, move on. And the goal is profit, make capital gains, generate capital gains. Obviously, perhaps this is good for tax deferred accounts, or you can't be afraid. As I always say, I'd rather pay millions of dollars in capital gains taxes that I generate than not have profits and not have to pay taxes. So if you are tax adverse, this is not your strategy. So.
Awesome, thank you. And we'll probably get into that in a second as well, on the application of.
Yeah. We do have, as happened during COVID, we did take some short positions as well, if it's needed. But that was few and far between, but we weren't nimble enough to do that. And so we do have that flexibility. But usually we have faith in the markets, and we always see that for the most part, there's always something winning, and that's what we want to jump onto.
Amazing. Thank you for that. Awesome. So yeah, we'll get into the application and how it may fit into direct indexing and things like that in a second. But just to give an overview to our audience on what we do at Index One, we offer a holistic index calculation platform that delivers fast, flexible, and scalable indexing solutions. So we help build indices based on custom strategies with full capabilities for backtesting, rebalancing, handling corporate actions, reporting, and distribution. So the winning concentrated momentum strategy index was established on our platform using a CSV file containing the strategy's weights and constituents. And this index is rebalanced on a weekly basis or on an ad hoc basis through our automated rebalancing corporate action tools. And from backtesting to calculation, maintenance, distribution, and reporting, the full life cycle runs seamlessly on our indexing platform. John, how would you describe the process of setting up the index on our platform?
Extremely user-friendly. You're terrific. It's just providing the selections and the weightings to you, and you and your team have been very user-friendly and fantastic in making that happen. And I greatly appreciate it and encourage, if anyone has a similar strategy that they would like performance to be tracked, to utilize Index One.
Thanks, John. Of course, this is a very interesting index, and it will be insightful to see how it may be used in institutional contexts. So how might you envision the strategy to be accessed or implemented in practice?
Well, they can obviously monitor it on Index One. Usually I share my analysis on LinkedIn as well on a weekly basis. And otherwise, if anyone would like have any specific questions, or or obviously need me to help consult, feel free to contact me directly, and glad to help however I can, so we can get some winners in your portfolios.
Thank you so much, Sean. And we're obviously very grateful for the trust that you've placed in us to develop and calculate a very interesting momentum index. We are, honored and happy to enable the full life cycle of backtesting, calculation, maintenance, and distribution for this momentum-based index. And we're, of course, excited to continue supporting you in bringing a very forward-thinking index to the market. We're now moving into the Q&A portion of the webinar. And to our audience, please submit your questions in the chat box and we'll address them as they come in. In the meantime, John, what is the application of the strategy in direct indexing and tax loss harvesting? Because you've talked about, concentrated versus diversified, and how this might not be fully applicable towards, tax loss harvesting or capital gains taxes. How would you envision this being set up in a direct indexing environment?
Well, as you know, in regard to tax loss harvesting, I mean, whenever we identify losers, we try to move on from them as quickly as possible. So we don't envision many losses to offset, hopefully, and it's all about maximizing the capital gains by riding the momentum in a concentrated area. As far as, in my career as a trust investment officer, you get the annual prepare with the annual performance statements, and a lot of them would have the top 10 with the performance. And you wanted to minimize the amount of losses. So what we try to do is obviously, move away from them so they don't blemish the screen and for the clients. And, this strategy can just help identify winners. If it's used as an index itself, then hopefully the weightings would be enough so that, the winners would be in their top 10 positions. And so that, to get rid of the, dog, so to speak. And hopefully if it's utilized long enough, then it'll enhance the performance numbers as well. So whether or not as a, utilized in whole or just a piece of an overall portfolio as the, large cap growth segment, we do focus exclusively, for this index on S&P 500 stocks. So, and that's important for, trading volume, among other factors. And so hopefully, this can be of use to those in need to, enhance the performance and also provide window dressing to those accounts.
Thanks, John. We've got a question from Badami. Hello, Badami. This is very helpful. Thank you very much, Mr. John Gray. Can one go through your fact sheets? Are they publicly available? Yes, they're publicly available on the live index page. You can find that on indexone.io/indices, and you can just type the name of the index, which is winning stocks or winning concentrated momentum strategy, and you'll be able to access real-time fact sheets for this index and any index as well through the live index page. Okay, so we got another question. Also, apologies in case I missed out the part in the definition of your momentum strategy. Would you be willing to go through just quickly what your strategy aims to do, John, just for Badami and anyone that might have come in late?
As far as the definition, obviously, is a concentrated momentum strategy. So you're looking at, anywhere between 13 and 24 stocks in the portfolio to avoid, having a winner and unfortunately diluted by, having excessive positions. And so, it's, the title of it is fairly self-explanatory as far as what we're trying to achieve. You're looking for stocks that have good performance across the board and being able to capitalize those in a meaningful amount so that, they continue to perform and they add to your bottom line. And, believe it or not, I was looking some of the analysis of the other 50 ETF momentum strategies, there are 13 that are large cap. Only 4 had performance above 20% year to date. But I find many of these strategies have the average of the 4 90 plus positions. So even if they picked the latest greatest next star stock, but if it's at 1%, great, it doubles. It's not going to add anything meaningful, and so that's the key. Whatever investments we have, they perform hopefully well. That it actually adds real money and performance to the portfolio, where many sadly are lacking. But so that is the difference of what we have, our niche, compared to others in the marketplace. Yes, there are momentum strategies. There are a few concentrated strategies out there, but for whatever reason, and this isn't reinventing the wheel as much as putting the peanut butter and the chocolate together, and hopefully this can help some people enhance their performance and make some money for their retirement and other personal goals.
Thanks, John. And off air, we kind of talked about this a little bit, but can this strategy be used as a short-term or a long-term strategy, or both? How do you see it?
Good question. And it all comes down to, what are your goals? What are your income needs? What's your risk tolerance? This is obviously a high growth strategy, and so I'm not putting the entire portfolios of widows and orphans in this. Hopefully we're able to limit the downside through active monitoring, and that's the key. Even if we put some self-stop limits in there, perhaps, if need be. But if we're actively managing it, we haven't had to do that. So it all depends. If you're looking for this specific, we are growth oriented. So whether it's a piece of your overall for the large cap, or for people who are more flexible with their risk, maybe they can do more, especially if they have a larger time frame and they are looking just for growth. Then this might be suitable for you. I am working on others that do provide the income as well, but this and that's to be shared in the future. But right now, this is what the main focus is, and hopefully it can be of help to some people.
Thanks, John. We've got another question from Chris. Hi, Chris. How big a sleeve do you think momentum strategies can pitch for in a multi-strategy portfolio? Is it the magic figure of 13%?
Okay. Again, the reason why 13, but obviously it's an odd number. Although I was born on the 13th of June, and so to me it's always been a lucky number. But the reason, obviously, 100 divided by 13 is 8, and so the key is that's where the 13 stocks comes up. It's 13, not 13%. It's 13 stocks, which creates 8% exposure on average, and up to 24 stocks, which would provide 4% exposure as the maximum positions. So overall, it all depends, on the client. What are the goals, income need, risk tolerance? How much are you going to have in large cap growth, large cap, if you're diversified, large cap growth, large cap value, mid cap, small cap, international, etc. So That's up to you of how you're managing it, whether as a piece or, overall, just you're young, you have other, revenue sources, and you're willing to, go all in, or a larger portion into a high growth oriented portfolio. So case by case basis.
Amazing. Thanks, Chris, and thank you, John, for answering that question. Let's see. Do we have any other questions? I don't think so. So I think this will be the end of the webinar. Thank you, everyone, for your time and participation and for all the questions. We really appreciate your participation as always. And John, thank you so much for joining us today. I think we had a fun conversation about all things momentum and your strategy as well.
Greatly appreciate all your help. And if you have any further questions, anyone, don't hesitate to contact me. And I couldn't recommend Index One anymore. I greatly appreciate you providing me the platform and obviously monitoring my performance. And I'll do my very best to hopefully keep it up there and look forward to any feedback. And otherwise, I wish you all good luck in all your endeavors, and hopefully you make lots of money and get winning stocks and performance.
Thanks, John. And I also just wanted to quickly show to our audience, if you wanted to look at all of the indices that we're calculating, including this index, you can go to indexone.io/indices, and you can kind of go over the live index page and the fact sheets and everything. So feel free to explore. And if you have any questions, you can reach out to us at Index One or John Gray directly. Be sure to also subscribe to our email newsletter and stay updated on our upcoming video content. Thanks, everyone, once again for tuning in, and we look forward to seeing you next time. Thanks, everyone.
Thank you.
Thanks.
Good luck.